welcome to another episode, or I guess it's not really an episode. Welcome to another webinar of our cash flow talks with CashFlow Mike. My name is Gary Dehart. Our speaker, Mike Milan, CashFlow Mike, as you may know him. While people file into the room, Mike, you were just in Tennessee. You're back in Texas. I'm in Georgia. Our weather this week here was phenomenal. It was like a 70 degrees like on Monday or something like that. So, question of the day. What is your favorite season?
Well, in Texas, we only have one season. It's just hot, right, the whole time. But I was always a sucker for fall, right? Yeah, up in Seattle and in St. Louis, where I spent most of my life. Man, I'll tell you what, fall, the crisp air. I like a 60, 55 to 60 degree where I can wear a little
Yep.
jacket. The colors, that I don't know. There's something about it. I like it.
I'm with you. Fall would be that'd be my favorite. Like the put on a jacket with shorts. That's the perfect outfit.
Yeah.
And then I can sit by a fire. So
Uh, but
yeah. So now speaking of year round the same, Matt, who's in the back, in the back, he's in the Philippines. So he's hot and humid. He gets it all. So I'm hearing a couple in the chat. We got fall is the seems like the preferred. Matt says it's hot, or he actually says it's hoot, but hot. And so, all right, so Mike's here. He's going to talk to us about unlocking cash flow from operating activities. So he's going to talk about managing cash, reducing workflow, working capital cycles, and enhancing overall cash flow efficiency. Before we turn it over to him, we do have, this is only a 30-minute session, so there's no CPE, but we do have a poll question we want to throw up, and it is about our Be Insightful premium content program and the cruise. So this is you got a 2-for-1 poll here. So our Be Insightful program, it's basically 9 training tracks, everything from a personal coach to automations, tech stack, app academies, or not app academies, app comparison charts that Murph puts together, and some marketing. So if you want some interest, if you're interested in that, let us know. Just check yes on that poll. Then we are doing a cruise next year. It's a working cruise, 7 days, and of those 7 days, there's like 3 full days of work, and it's basically a time which we're inviting people onto this cruise. Inviting, you have to pay for it, but so you have your cruise costs and then the expense of actual the Be Insightful program built in. But what we're looking to do is get people on this boat. It's going to be moderated by Don Brolin, a couple of others, and the point of it is to give you time to work on your business. It's over, none of us do it as small business owners. We work in it, we don't work on it. And this is a time where it's going to be a guided, curated experience for you to work on your business over this 7 days of this cruise. So if you're interested in it, want some information, click yes, and otherwise we won't bother you with it. So there we go. I'm going to end that poll. I am going to turn this over to Mike. Thank you, sir, for being here, and turn it over to you and Matt. Thanks,
all
everybody.
right. Good. Thank you, sir. Thank you, thank you, thank you. All right, let me get back to this. Welcome live from San Antonio's CashFlow Mike. You could tell it's summer. Tennis is down a little bit, but that's okay. We got great stuff for you. I'm excited about today because it's all about operating activities and what that is. So, Kathleen, I agree with you. Margarita season, man, and that's every single day in Texas, right? You can go anywhere in the city and get a margarita to go, even, right? You can get them to go. So that's a pretty good deal. Anyway, hey, Jordan, good to see you. And Linda's here. Right on. Welcome. So here we go. I'm going to share my screen and get this thing started here. Where are we at? Boom, boom. Okay. So here's why I do this, right? So I've been doing this now for a little over a year. And the reason why I'm on a mission to eliminate cash flow is the reason that businesses fail, right? I want you to fail for some other reason, right? People don't like your product. I don't want you to run out of money. That's what we're trying to do, because bankruptcies, even though they've been trending down since COVID, they're still too high on me. 18, 20,000. Think about that. When you see 18 or 20,000 businesses filing for bankruptcy, that's 18 or 20,000 families and the people that they support in the business. So, I mean, we're talking, probably 100,000 plus people affected by this. So to me, that's a big number. and I'm here to do something about it. And I hope you'll be on that path with me. So let's talk about these operating activities. First of all, when you look at the cash flow statement, it's broke up into three different sections. It's operating activities, it's investing activities, and it's financing activities. So operating activities is just what happens in your business, right? It's just what happens. It's your core business. It's your business, and it's supposed to make money. So you always kind of want this number to be positive. But the other two, people get a little confused on what that means. So just let's break it down really simpler to investing activities are more about how you use money in the company to generate revenue and profit. So we buy a truck, we buy a building, we buy things like that, and we're supposed to use that money to actually grow our business. So that's an investing activity. Lastly is a financing activity, and you can use debt financing where you go get a loan from the bank, or you can get, equity financing where you put your own money or you and, the other shareholders in the company's money in. And that's kind of the jet fuel, the money that got it started to begin with. So, or that keeps it going, or the money we take out of the business. Those are all financing type activities. So the way we look at operating activities, because it's just core stuff, all the numbers come from two statements, right? It's the income statement and the balance sheet. So the income statement is, hey, we're going to start with everything we do, we sell, and go all the way through our business with expenses, all the way down to net profit. And then from the balance sheet, we're going to look at changes in the conversion cycle. So if I look at it a little bit more simply, operating activities is looking at your business in two different directions at the same time. You're like, going, what? What does that mean? Well, you got to remember, if you look at my mining your business for hidden cash chart, it really is focused on operating activities, right? Even though I call it cash generating activities or cash conversion activities, it's looking at how money moves through a business, and it moves both vertically and it moves horizontally at the same time. And people are going, what? You're probably confused. Well, let me explain. Because usually we go out there and we get some inventory, right? And the inventory sits on the shelf and it sits there for a certain amount of time. We hope that's not a long time, but it sits there for a certain amount of time, and then finally somebody buys it. And when they buy it, that starts the vertical part, right? The horizontal part is how long it takes for this cycle to happen. The vertical part is we generate sales, we use our cost of goods sold, we have gross profit, then we've got operating expense and net profit. Well, that's how we generate cash, is through sales and spending, and how cash converts is how long it takes for this to happen. So when we have cost of goods sold, we probably got an invoice from the person that sold us the inventory, right? So we've got that. So we've got to make a payment to pay off our our inventory. So we're paying in AP days. So these aren't directly related, but we might do the expense first and then the payment later, but that's all timing. You got to remember, the vertical is all about a profit problem. This is a business model problem. The horizontal is a conversion problem, or it's a timing problem. So that's why we look at both of these at the same time. So cost of goods sold is really me paying or recording the payment for the actual inventory that I bought. And then of course we got gross profit beyond that. And gross profit, I've got to tell you, is the most important number on the income statement. Is the only place we can go to get cash, right? To pay for our expenses or put in our pocket, right? Because you got operating expense and net profit. And our hope is that sometime before the end of the month or sometime soon, the customer makes their payment. So when we're looking at operating expenses, here are the core activities, right? The inventory we buy, the way we pay our bills, the way we, get paid, and the way we spend money. So how do we optimize this stuff? Well, I mean, for me, I always start with inventory. Inventory always seems like there's wealth on the shelf. It doesn't matter who I go talk to, it doesn't matter what client I have. They always seem to have too much of something. Maybe it's not too much of everything, but too much of something. So, how do you determine whether or not they have too much? Well, you use the PAR calculation. If you guys remember that, I think it was like a week or a month or two ago, we talked about PAR. And what PAR is, you take the average number sold per month and divide that by the number of times you can get it per month. And that tells you how much you should have at the beginning of the order cycle. For instance, I always use, when I ran restaurants, I always, use the Budweiser, case. If I had 200 cases of Budweiser that I sold during the month, that would be the average number sold per month. And I divide that by how many times I could get it per month, which was weekly. The representative would come in on a Monday. He would take my order, and I would get the order on Wednesday. So I could get it every week. So it's 4 times a month. So 200 divided by 4 equals 50. That means I needed 50. So if I walked in on Monday and I saw 62 cases, I wouldn't order Budweiser. If I saw 30 cases, I would only order back to 50. So that simple little technique will put you in the position to be able to know how much you should have of every single product. Does it take a little work? Yeah. Can you use a spreadsheet? Even better, right? Because it makes it fast. And I have a spreadsheet called the Inventory Master Worksheet that does it. And I'm currently right now building all of this into the app. So it's going to be really cool. But accounts receivable, making sure you get paid, right? So me, I just got done with a seminar in Memphis, and guess what? I came back, organized all my receipts because I get reimbursed for the expenses and sent the invoice the next day. I don't wait a month, I don't wait a week. I try to get my invoice right out after the work is performed. That way I can get paid faster, right? Operating expense, just making sure that we're falling in line. And what I like to do is compare myself to the industry average, because if everybody else can get away with spending that much money, so can I. Payment terms. If you have cash, right? And how much cash should you have? 3 to 6 months worth of operating expense. But if you have cash, well, maybe you should take the discount because that's a real discount, right? If you look at 210 net 30, I get a 2% discount if I pay in 10 days, otherwise it's net 30. If you can do that without going below your reserve, which is, we'll say, 3 months, without going below the reserves, then by means, all means, take the discount and save the 2%. It's real cash over the course of the year. And then always forecasting, right? Forecasting is always just showing me if the bus is coming. And the farther I can spot a problem developing, the more options I have. And then, of course, we always have to drive revenue. We have to have, something every day where we're bringing the money in the door. So let's talk about the cash flow statement and operating activities, because people get kind of confused. And I'm going to have you put this in chat just to see where people are at. But what I want to do is understand if this is a source of cash or a use of cash, right? Is it a source or use? Now, cash flow means something different to everybody. To a business owner, it means, do I have money in the bank account or not? To an accountant, it's inflows and outflows. To a banker, it's sources and uses. And I want you to know this, that if nothing happens, if it's a zero, that's considered a positive impact in cash or a source of cash. So just remember that. That's something that's a little hard. So this is going to help you understand the cash flow statement just a little bit better. So let's kind of go down through it. Is an increase, and just put S or U, right? Source or use, put that in the chat. I got chat up. S or U. Is an increase in prepaid insurance a source or use of cash? Anybody? Linda says source, an increase in the balance. That means I paid more for insurance. It's actually a use of cash, right? It's a use. That's going to be my symbol for use, money going out, because I actually paid the insurance company, but I paid in advance. Now I got the whole year, a whole quarter paid for. So it's an increase in the balance. That's a use of cash. What about a decrease in supplies on hand? I had some stuff in the warehouse and I used it. Is that a source or a use of cash? This one's a little harder. Anybody? Source, use, SU. And it says source. It is a source, right? Because we didn't go use cash. We already used what we had on hand. No cash left the building. And that's the difference between source and use. Did cash leave or did it come in? And if it did nothing, it's considered a source, or it's a positive impact on cash. All right, proceeds from selling the business or selling equipment used in the business. I sold some equipment. Is that a source or use? That one should be pretty easy. I sold it, money came in, right? What about if I lost money on it? I lost on the sale of the equipment. I lost on the sale. So when I sold that equipment, I had to do a loss. That's also a source because I still sold the equipment. Even though it's recorded as a loss on the balance sheet, money still came in because I actually transacted and money came into the company. So the loss is just a paper loss from whatever we wrote it down off the balance sheet. An increase in liability, right? I owe more taxes. This one's also confusing. When you increase a liability, that means you owe more, but money doesn't leave. So it's also a source, right? It's also a source of cash. So because no money left, I owe more, but no money left. That's the rule. All right, a decrease in accounts payable. Linda, you're playing along. So if you decrease accounts payable, what's that? It means I use money. Yep. Use money to pay, right? Whatever I owed, I actually used money to pay, and the balance on the balance sheet came down. I decrease in accounts payable. An increase in accounts receivable is also a use of cash. And I'm like, going, wait a second, didn't I sell something? You did, but you had to front it up. You had to put the money up front to do the sale to be able to generate the accounts receivable. So an increase in accounts receivable means I've already done the work. So I use cash to do the work, but I haven't got paid yet. An increase in liability. Remember, that's a source because I might owe it, but I haven't paid it. If I pay dividends, that's a use. If I have proceeds from stock, I sold stock. That means money came in, so it's a source. So what I'm trying to do here is just like going, we have to look at the cash flow statement is where did money go? It's actually the movement of cash. And if no cash moves, it's considered a source of cash. And this is how the bank looks at the balance sheet. And I think it's important for accountants to know, especially if you're going to help somebody apply for a loan. So let's talk about this. Which one of these are actually operating activities? Right? Which one? Is depreciation expense an operating activity? Well, remember, it's all about the core business, and depreciation expense is a core business. It's on the income statement, right? Anything that's on the income statement is about your core business. What about the proceeds of sale? Sale of equipment used in the business, the proceeds. And the answer is no. That's cash flow from investing activities, right? Because the equipment, I buy equipment to generate assets and revenue. So that's actually an investing activity. Here's where it gets confusing because what if I lost? Remember, I'm just asking the same questions I asked you on the other one. If I lost money on the sale of the equipment, it's actually an operating activity. Why? Because again, it's on the income statement. It's loss from sale, right? As we put on the income statement. So it is a core business activity. The loss is, but the proceeds are investing activities. Then we got when we paid dividends, that is a financing activity. I gave money to the owners. So that's a financing activity. A gain on the sale, right? So if I used an automobile and I recorded a gain, it is, right? Same thing as a loss on the sale of equipment. So we're going to have an actual line item on the income statement. And then the proceeds, again, I tried to trick you here, right? So I tried to go back and trick you, say, well, let me ask you the same question again, see if you get it. If I owe more, an increase in the balance of inventory, which means I bought more inventory, is that an operating expense or not? And the answer is yes, right? Because I need the inventory to run my core business. So an increase in inventory is actually an operating expense or activity. An increase in accounts payable, that again, that is an operating activity. Remember, I showed you the first two blocks, the income statement and the balance sheet, and we're talking about changes in current assets, changes in current liabilities are actually operating activities. If I paid off some debt, nope, that's financing. And if I bought back some of my own stock, that's a financing activity. All right. So again, the point of this is to be able to understand what's in that section, the operating activity section. So how does it even get done? How does it even get to the actual income statement or to the cash flow statement? Well, if you look at it, it comes right off of the balance sheet. And probably you've seen me do this exercise before, but there's a lot of people who don't understand that the cash flow statement is actually the second way to look at the balance sheet, because we look at the balance sheet usually in vertical math. When I'm owed more money, the balance goes up. When I get paid, the balance goes down. That's vertical math. Well, the cash flow statement is horizontal math, meaning I'm going to look at what it was. I was owed 345, but now I'm owed 250. So the balance went down. That's a source of cash because I got paid. That's why I'm owed less. I actually got paid. So the source of cash is a positive 95. Again, what I'm trying to do is explain to you how the numbers get there, because sometimes we look at the numbers on a cash flow statement and we can't figure out where the number comes from. Well, just remember, it's the change that you're seeing. And if it's a positive or negative number, it's because it's telling you it was a source or a use of cash. So when 345 to 250 is 95. So I got 95,000 there. Then I bought some stuff, right? My gross fixed assets went from 2 million to 2.2 million. So I used cash. When you buy stuff, you use cash to buy it. So $260,000 was property, plant, and equipment. Well, think about this. That's a use of cash. Now, here's how the balance sheet comes together, or the cash flow statement comes together. If we take 95 and subtract 260, that equals negative 165. So on the asset side of the equation, right? Assets equals liabilities plus equity, but asset side of the equation, the change in cash was negative 165. Now we go to the bottom, it's kind of the same thing. I owe more money, so it's an increase. Remember, an increase in a liability, I didn't pay it, so it didn't leave the company. It's a positive use of cash at 26. But then I paid down debt. I paid some taxes. I paid some liabilities. I bought back some stock. And then this number should be very close to your net income, right? From the income statement. This is where everything from the income statement gets put onto the balance sheet in the form of retained earnings, minus whatever we took out for dividends and things like that for ourselves. But this is going to be really close to what the net income was. So if we add these up, 26 minus 2 minus 10 minus 89 minus 14 minus 1 plus 378, you get 288. And you're like going, yeah, why do you do that, Mike? Who cares? Well, first of all, you probably don't do this. I'm just trying to show you how the statements all run together. So let's look at it as one. Remember up top, we had 165 to the negative. Down below, we had 288. We're just looking at the change. And if we add those together, the total is 123. Yay, I got a 123. Well, 123 means that's the whole change in cash of all the things that happened this year in the company. Everything that happened, we had a change in cash of 123. What's interesting now, if we go up and look at cash, right, because I ignored it at first, from 12 to 135 is also 123. So just remember that your change in cash, the very top number, will equal all of the changes that happen below cash on the balance sheet. Now, this is what they do to create the cash flow statement. They come up with what the change in cash is and organize it just the way we said, right? So I've got that change and I'm going to organize it. Here's the balance sheet, and I take my income and put it into operating activities. And I take accounts receivable in operating activities, and I take, accounts payable in operating activities, right? Just all we're doing is organizing this the way it should be. So now we've got 378, 95, 26, 89, 14. It all came from the balance sheet, but now it's just organized to show you just the operating activities, and those add up to 396. Keeping going, well, I guess keeping going, we'd have negative 260 for all the stuff we bought, and negative 1, negative 10 is all the other things that we haven't accounted for, but 396 minus 260 minus 13 equals 123. It doesn't matter how we slice and dice these things. The number and the change of cash is always going to be the same. Now, when we're talking about optimizing your operating activities, I want to show you something cool I've been working on. So if I go over here, and I'm sure you can't see that yet, so I've got to pop it open. Cash flow, fast money formula. Okay, so I'm working on updating the app for the ClearPath to Cash app. And let me go to Zoom, share. Where'd you guys go? Oh, am I still sharing? I'm sharing the wrong thing. That's what I'm doing. I'm sharing the wrong thing. Let me share the new stuff. Okay, so when I look at operating activities, I got this thing called the fast money formula that helps you optimize it, right? So what we talked about is how long does inventory sit on the shelf? Let me make that a little bit bigger. How long does inventory sit on the shelf? Then we sell it, then we wait to get paid at the same time we're paying. Well, the difference is this cash gap, the financial gap. And what I want to show you here is that means this company's short about $900,000 because they have a cash gap of 68 days. Well, if we start to just manipulate this stuff, like maybe I hold less inventory, watch the chart. If I hold less inventory, it's going to tell me, hey, just make it a 4-day move. We'll put $72,000 into your pocket, right? And it actually reduces the cash shortage all the way across. Or if I can collect a couple days faster, we can get $15,000 there. If I pay a little bit slower, I can get some money there. We can find the right thing to actually solve this cash flow problem. So that's what we're trying to do with operating activities, is not only sell, not only spend properly and with discipline, but we're also trying to manage the time that this stuff happens. And this is how I help my clients do it, and is teach people and give them tools. You see how that gap keeps getting shorter? And if I get paid faster, I'll actually be able to reduce and maybe even solve the cash shortage for the client and set a good plan for them. Let me go back to share the thing. So, any questions on that so far? Questions on what we just talked about? Comments, concerns, moans, groans, gripes, complaints, otherwise. Always like that one. Nothing in the chat. Okay. Everybody's tired of me. They're saying, just be done, Mike. Continue share. Did all that. So here's what I got. If you haven't seen my stuff, right, I've got a free course for you called the 7-Minute Conversation. It is the home run financial system, and it's based on my book, The 7-Minute Conversation. You can get the course for free right now, right? You can go get the course for free. Just go to my website, cashflowmike.com, and get it there. I do have a Facebook group where I've got lots of different tools in there. I've got pricing calculators, I've got worksheets, I've got spreadsheets. You just go to the guides section. So if you haven't joined us this way, yeah, Kathy, she'll vouch for me. But go to the Facebook group. It's called the Clear Path to Cash. Lots of free stuff in there for the Clear Path to Cash. I also have a podcast, right? This podcast I've been doing, we just hit our 202nd episode. We get a few thousand downloads a week, so I'm really proud of it. And basically, it's a former competitor. If you've ever heard of co-opetition, that's Blaine and I. I built CashFlow Tool. He built Dry Run. And what we do is just talk about the entrepreneurial life, common things that we fought, common things that people experience, so they can actually, they can actually help solve problems, right? So if you need stories to help tell your clients, come listen to Mike and Blaine, because I'll tell you, the stories that come out of that are things that you can use in your everyday business. And if you want to know more about me and what I do, that app, what you're seeing is kind of a sneak peek on the second iteration. I do already have one version, but I'm now in the cleanup phase. I'm making it look better and better and more cooler. One of the bad things about that is when I release a new version, everybody that's in, they're locked in, grandfathered in pricing. Everybody that's not in has the new pricing. So if you're interested and you think this is something that you can help yourself with in your advisory practice, go check it out. Contact me, set up a time to meet. I'll show you everything we got, and you can make a good decision. So I really appreciate your time. Looks like we're about 2 minutes short. So I've been trying to nail these things down to about 30 minutes. I know it's a lot, but remember, operating activities is your core business, and there are things you can do. It's both vertical or cash generating activities and cash conversion activities that make up that number. So I appreciate you. Cashflow Mike. Matt, I'm going to give it back to you, and we'll talk to you soon.